Shares of CoreWeave popped today after Nvidia announced it's investing $2 billion US in the company. CoreWeave stock has been volatile more recently. Investors concerned about too much debt as it works to build out data centers. Let's go to Jay Goldberg, senior analyst at Seaport Research Partners. Jay, thanks for joining us today.
Thank you.
Nvidia was already a shareholder in CoreWeave. Could you clarify the relationship? Because there are concerns, of course, about the circular financing.
So that's a complicated question. Nvidia is an investor in CoreWeave. They are also CoreWeave's main supplier of GPUs. I think it's their only supplier of GPUs. They're also a customer, and now they're a partner, and they're investing more. So it's pretty much all the things Nvidia and CoreWeave are doing together.
Okay, so Jensen Huang, of course, says it's not a circular deal. Would you argue that point?
Well, I think it is at least a little bit circular. Nvidia is going to give money to CoreWeave. CoreWeave is going to use that money to buy Nvidia GPUs. In order to do that, CoreWeave is going to have to borrow a bunch of money in order to buy those GPUs because $2 billion isn't enough. So they're going to have to borrow money, and Nvidia will be a guarantor of that loan to some degree. So it's a little bit circular. It's a little bit complicated. But this is Nvidia's way of sort of seeding the ecosystem of what we call neoclouds, sort of alternative cloud service providers, and it's complicated. There is some degree of circularity there, but there's also a lot of demand.
Okay, can you clarify or explain a little bit more about why there are concerns about circular financing? Because it is in context to the fact that people worry about the AI bubble. So if you could just explain the concerns around that.
So I think the question boils down to, is Nvidia just providing sort of easy financing terms, like sort of facilitating the deal, or is Nvidia actually creating that demand? And I don't think the answer is entirely clear. It's a little bit of both, right? If Nvidia weren't investing in CoreWeave and weren't backstopping its loans and backstopping many of the other neoclouds, it would be harder for the neoclouds to do business. But they all claim that there's sort of insatiable demand. There's lots of demand everywhere. Again, I think it's a little bit of both here, where Nvidia is sort of pushing demand along, but they're also enabling a lot of this in sort of fairly straightforward ways.
Okay, let's talk about CoreWeave itself. What is its bigger plan?
So CoreWeave is interesting. There are about 200 neoclouds out there. The number keeps growing, and that's obviously too many. I think most people looking at the space would agree that we're going to have some consolidation probably next year, where sort of the market rationalizes. And so the question then is, like, who will survive? Who can differentiate? Because to a large degree, providing cloud service on NVIDIA GPUs doesn't seem to be a lot of value for that neocloud as the intermediary. Everybody can buy NVIDIA GPUs. How are any individual company going to differentiate? And I think CoreWeave is the one very clear example that they have something a little bit different. They are better at managing GPU networks, arguably better than even NVIDIA at using its own stuff. They have a lot of software tools. And one of the things that the company really pointed out today was that this deal includes a sales channel for CoreWeave software to other NVIDIA customers. And so CoreWeave, I think, is trying to differentiate itself to sort of show how it stands out from other neoclouds by having this sort of software element in their mix.
Okay, so CoreWeave, we know, has been trying to diversify its customer base. You're saying its avenue will be better under this new NVIDIA agreement, but has it been successful on its own to do that?
There are some signs that it's pushing forward, that it's sort of diversifying its customer base. It's still very reliant on Microsoft, OpenAI, and sort of two or three of the big hyperscalers. And we've seen some improvement, but they're still sort of 60-70% reliant on three customers.
Okay. You have a hold on CoreWeave. I'm wondering whether the announcement today changes your outlook for the company.
Yeah, valuing all these companies is very difficult because right now the numbers are sort of they're getting a big benefit from numbers from these very large contracts from these customers. And we've seen this with a few other neoclouds too, like Nebius too, where they get these big contracts, and it's sort of like a snake eating a pig, like a boa constrictor eating a pig. There's this huge surge in a bulge in revenues, And how that sort of plays out over time isn't entirely clear. How to what degree can CoreWeave build a sustainable business, diversifying away from these big bulgy customers? And I think this is a step in the right direction. Like I said, I think CoreWeave is one of the best of the neoclouds out there, and this sort of demonstrates that. But it's really tough to value the equity right now. It's a pretty confusing, fast-moving landscape.
Yeah, or does it suffer some serious indigestion as it digests? Okay, Jay Goldberg, thank you for joining us. Appreciate it. Jay's a senior analyst at Seaport Research Partners.